How's it going, guys? Nick here, and today I'm going to reveal my entire Robinhood investing portfolio. I'll show you every single stock and ETF I've invested in, how much money I have invested in these stocks, how much I've made, and why I've invested the way I have. As you're watching me go through my portfolio, if you have any questions about any individual stocks or why I did something, put it down below in the comments and I'll definitely respond. Now, I'm sure some of you know Robinhood has been under fire from the media and the everyday investor lately because of the entire GameStop short squeeze scenario. So you might be wondering, why am I still using Robinhood? Well, after I go through my entire portfolio, I'll touch on that at the end of the video just in case any of you are curious. Before we get into my Robinhood portfolio, be sure to go down below and destroy that like button. I mean, go down there and really click it. If you guys didn't know, doing that helps the video and my channel out as a whole. All right, now that you have destroyed that like button, let's get into my stocks. Okay, so up on the screen right now, I have my Robinhood account and my portfolio on the right. So let's just look at the numbers real quick that are on the screen. So right now my account is $14,440.61. Now I have it in the all-time view. So that means all time since I've had this Robinhood account, which if I go scroll over and check, that's around mid-2017. So at the time I was in college, just getting started in investing, and I was just kind of playing around with different stocks. But since then, from 2017 to 2021, I'm up 63%, almost 64% all time, and that equates to $5,604. Now, before I even get into the individual stocks, why I chose them, how much I made on them, my investing strategy is mid to long term. So usually I won't try to speculate the market or try to buy low and sell a couple days later high. I really like investing in companies that I think will actually do well after I do my research, and so far it's paid off. Okay, let's get into the first stock we see on the screen right now, and that's Microsoft. So right now, this number you see on the screen, this $168, this is my all-time profit from this stock. So let's click into Microsoft and see a little bit more about what's going on and when I bought it at what price. So as you can see, Microsoft today is at $241 a share, and my average cost for Microsoft was $73. Now look, I only bought one share, but since then, the stock has grown 226%. Now you'll see a theme here as we go throughout my portfolio. A lot of it is tech stocks. Now I'll say it once here so I don't try to repeat myself, but I really believe in tech stocks and the tech sector as a whole. Look, it's 2021, every business nowadays has to be using technology to thrive. And all of these tech companies are just gonna keep growing exponentially. So with that, let's look at Apple. So Apple is obviously another tech stock. Basically all of the devices I have are Apple devices. So buying this stock for me was basically a no-brainer. I bought in at $55 average cost a share, and now the market value of all my Apple shares, which is a bit over 9 shares, is $1,158. Now my total return on this investment so far is $654, or almost 130%. Again, tech stocks I think are a great long-term investment. Okay, now let's talk about some ETFs that I think everyone should have in their portfolio. So we can see on the screen right now, I've scrolled down a little bit, XLK, VU, QTech, and VYM are all ETFs. Now, VU is an S&P 500 index fund. I truly believe every single investor, from beginner to advanced, should have some sort of S&P 500 ETF in their portfolio. Now you can see here, my average cost was $248 and the total returns have only been 43%. But this is what you'll really expect from an S&P 500 index fund. The total market value I have is a bit over $2,000. It is a large chunk of my $14,000 portfolio. That's because I view this investment as a little bit lower risk than individual stocks. So to keep going with some ETFs I'm invested in, we have XLK next. So XLK, I have almost 10 shares of it at a $455 profit so far in the past 4 years. Now, XLK actually tracks an index of the S&P 500 tech stocks. So if you guys can tell now, I do love the S&P 500 and technology. And you can see here on the screen at a total return of above 51%, this has a better return on my investment when comparing to VU, just the regular S&P 500 ETF. Okay, I won't click into these next few, but QTech, VYM, and SPY-D are all ETFs. QTech tracks the NASDAQ 100 Tech Sector Index Fund. And you can see I have a bit over 4 shares, and my total return is 112%. So these next two you see, VYM and SPY-D, you can see that the profits haven't been nearly as much as all of my other securities, but this is because these are both high dividend yield ETFs. The goal behind these ETFs is to have higher dividends than the rest. So while the profits from these ETFs actually going up aren't as much, these in theory should be giving more dividends every quarter. Now, as you can see, I only have 6 shares of SPY-D and 3 shares of VYM, so it's not like these are giving me hundreds of dollars in passive income every single month, but it's still a decent amount to keep a portfolio going. So I just clicked into SPY-D real quick, and if we scroll down on the page, we can see that the dividend yield is 4.74%. So in theory, for an entire year, I should be getting back 4 to 5% of my total investment in dividends. Okay, so these next 3 stocks that I'm invested in are heavy hitters. We've got Tesla, Amazon, and Google. So let's explore Tesla a little bit more. So as you can see, Tesla right now is a bit under $800 a share. If I scroll down, we can see my average cost is $505. So I definitely missed out on that explosive Tesla growth that we've seen over the past couple of years. I bought post stock split, but everything's fine because I am still up 56%. And Tesla is another stock that I think is just a game changer in the industry for automotive and technology. It really all changed for me when I test drove a Tesla, and the self-driving in it is incredible. I fully believe in Tesla, and since they're so far ahead in the EV space, I think they'll only keep growing. Okay, now on to one of my favorite investments so far is Amazon. So you can see Amazon right now is at $3,313 a share. So I bought this all the way back in 2018. Now I only have 1 share and the cost of it was almost $1,800. But that's definitely panned out so far. I'm up 84% on Amazon with a total return of a bit above $1,500. Now look, until Amazon is broken up because they become a monopoly or something else happens in the industry where someone overtakes Amazon, Amazon will still be the primary place people go and get goods. And Amazon has definitely taken advantage of the current times we're in where everyone is stuck at home and they don't want to go out to the store. So I do believe Amazon is a great long-term investment still. Okay, now we're on to Google. Google, or better known as Alphabet, is at $2,112 a share. Now this is the Class C version of Alphabet. I believe the Class B version has dividends included, but the Class C version does not. Now, as you can see, just like Amazon, I only have 1 share of Google, and that average cost was $1,092. And since then, the stock has risen almost 100% at a total return of a bit above $1,000. Again, like Amazon, I think Google has a very, very big foothold in a lot of different industries within technology, and I don't see them going away. I mean, look, when was the last time you used Bing or Yahoo? And I get paid by Google because Google owns YouTube. So I'm kind of investing back in myself here. If Google grows, hopefully I'll grow with YouTube. Okay, now next, I won't click into this one, but we see VTI at 1 share. This is just an ETF of the total market. So like VU, which tracks the S&P 500, those 500 companies, VTI tracks the entire stock market. So again, if you're a beginner, this is a great stock because you can just keep throwing money in here and it should grow relatively well over the long term. Now the next few we're about to look at are either stocks or ETFs with super high dividends. So when I invested in these, I was just playing around and said, okay, let's just try to find some of the highest dividends there are and let me invest in them. So first, we have Alpine Global Premier Properties. Now you can see my market value here is $183 at a total return of just above 16%. So that's actually not too bad. And if we scroll down, we can see the dividend yield for this is 8.66%, which in dividend terms, that is a crazy high dividend. And this is basically the same with BIT, BlackRock Multi-Sector Income Trust. Now we can see this is also up 18% since I bought it, but we can see the dividend yield on this is 8.31%. My last two high dividend yield stocks are Cohen & Steers Infrastructure Fund. This has a dividend yield of 7%, and Eaton Vance Enhanced Equity Income Fund has a dividend yield of 6.41%. So those dividend yield stocks were basically to grow my portfolio and kind of diversify. If the stock market tanks, I hopefully will still have those dividends bringing in some income. And just a quick tip for all of you that don't know, you have to pay taxes on dividends you earn. They're just like income, so they get added on your taxes as other income. Okay, now we're in the home stretch. We've got IBM and Wix, two other tech companies. Obviously, you all know IBM, but Wix, if you didn't know, is one of those websites where you can build a website without actually coding. I used this back in college for a few products, and the interface is very easy to use, very easy to set up your own website. And so far that's paid off. I don't even have one full share, and I'm up $34. If we just look at Wix, we can see it's at $338 a share. It's even up 11 to 12% today, which is great. And you can see my total return so far was 34%. And just to let you know, as we're reaching the end of this list actually went from when I first bought the stock to when I most recently bought stocks. So these stocks we're seeing were bought definitely within the past 6 months. Okay, now these are my favorite new investments. We can see all of these ARK ETFs. So ARK K, ARK W, and ARK Q. I won't go too much into depth on this because I'm going to do a video about ARK Invest and their ETFs, but basically ARK Invest has all of these ETFs. There's one for innovation, robots, autonomous vehicles, basically everything in the tech sector. And ARK Invest has been making news as of late with all of their picks being very, very good. So I'm going to skip out on actually clicking into those because I'll do it in a future video, but I am investing in these ARK ETFs on a weekly basis. Not a lot of money, but just something to keep building my portfolio. And then if there is a dip in the market, I'm going to buy up a lot of these ETFs. And to close out, you can just see here this PSEC, Zine, and SPPI. Those are actually from Robinhood. Those were free stocks I got from Robinhood. So I'm not going to talk about those. But then I have here Verizon. I basically used Verizon for most of my life, so I'm comfortable with them. I recently had Cox, didn't like it too much. So I do believe in Verizon as a company. And with their 5G coming, with the internet continuing to explode, I definitely think Verizon is a great long-term investment, and they have good dividends. If we scroll down to look at their dividends, let's just see. They have almost a 5% dividend, which is pretty good for a company. So that was my $14,000 Robinhood portfolio. Now you may still be wondering, why am I using Robinhood after all of the recent events? Well, simply put, Robinhood is definitely an easy platform to invest in. Now, as I told you, I'm more of a do my research and invest for the medium to long term. And what happened a few weeks ago with Wall Street Bets and Robinhood restricting some securities like AMC stock and GameStop stock, those are types of things that I don't really worry about. I don't need to trade these stocks in a time-sensitive manner where I'm trying to guess what the market's gonna do. Really, what I'm doing is either going in every week, setting up a recurring investment, or going in and buying a stock or two at a time. Now for that, for the beginner to intermediate investor, Robinhood is perfectly fine. Now, if Robinhood does have any more slip-ups where they have major outages of a day or more, I probably will be moving all of these stocks to another platform. Some other platforms to consider if you're wondering are Webull, Fidelity, and Charles Schwab. If you're looking for free stocks for Webull or Robinhood, I have them down below in the description. But yeah, that's basically it. That was my $14,000 Robinhood portfolio revealed. Thank you for watching. Remember, give this video a big like if you haven't already, and I'll see you next time.